to mywealth.com. I'm Mike Conlon. I'm one of the senior instructors with the courses. Welcome to today's blog. Today's blog is entitled Yen Yang. Okay, I've written recently about the strength of the Japanese yen and some of the reasons behind the move that brought JPY to an 8-month high versus the US dollar, or USD. Last week, Japan's Finance Minister Fuji had voiced his opposition to government intervention to slow the strength of the yen. Okay, but this week he may be changing his tune. All of this comes on the heels of the G20 meeting, which wrapped up last week, where who knows what was actually discussed. Today, Japan reported that consumer prices fell a record 2.4%, as deflation is putting further pressure on an already fragile Japanese economy. Combined with the strengthening yen, this could be a recipe for disaster, which could derail economic recovery. It's no wonder that ex-Bank of Japan officials and others are backpedaling from those statements that Fuji made and trying to talk down the yen, whose strength could harm Japan's exports. So what's going on with the yen, and what does this mean for other currencies and markets going forward? Well, if the current correlations hold up, there could be some interesting times ahead for both the U.S. stock markets and other commodities.
As always, be sure to check out the written blog at www.mywealth.com/blog. I've got a lot of links in there for you with this week's blog, so you want to take a look at it. It's really going to show you what's going on over there in Japan, and you might not believe me otherwise if I told you, but they're all over the place, needless to say. So let's take a look at some charts here. All right, what we're looking at is a daily chart of the U.S. dollar Japanese yen currency pair. All right, and as you can see from the chart, the U.S. dollar is clearly in a downtrend. So if you're unfamiliar with how to read currency charts, basically it's the first pair, okay, or the first currency in the pair that determines the direction. So while this chart is showing down for U.S. dollar, this actually means up for the Japanese yen. So with a chart like this with a downtrend for U.S. dollar versus the yen, okay, that means that the yen is actually showing a lot of strength here. Okay, and I've talked about this in some of my blogs in the past couple of weeks. There are some reasons for the yen having such strength, but basically I said that I thought maybe that the yen would probably get down to around the $87 level over the course of the next couple of weeks, unless I saw something on the charts or something out of the government that would lead me to believe that this trend could change. Well, that's what I'm seeing on the charts here today. All right, this candlestick that I've pointed out here, it's called a hammer. Okay, it's basically it's doji, but what this shows is it sometimes shows reversals at the bottom of a downtrend. Okay, and with the bottom of the downtrend, you can also see that it's just below the Bollinger Band. Okay, now the Bollinger Band is a technical analysis tool that it shows you where the range of the currency pair is trading. So anytime you get outside of that range, okay, there's a high probability that it could bounce back. So this candle right here is showing me that there could be a reversal in store for the pair USD JPY. All right, and that also falls in line with what we're hearing out of Japan now, that they may not actually be that adverse to currency intervention. So while Minister Fuji came out last week and said, no, we don't think we're going to intervene, well, now they're all sort of backpedaling and say, well, we just may have to intervene at this point because if the yen keeps strengthening, that's really going to hurt Japan's exports. All right, so what happens then if the yen starts to strengthen, okay, and the dollar starts to if the yen starts to weaken and the dollar starts to strengthen against the yen, well, what that's going to do is that's going to reverse the most recent change we had in the carry trade. All right, now the carry trade's been around for years. What it basically means is everybody borrows the lower yielding currency and they invest it in higher yielding currency. And for years, that lower yielding currency was Japanese yen. Well, just recently with the destruction of the dollar, the U.S. dollar that we're talking about, people have been using the U.S. dollar for the carry trade. All right, well, now if the yen starts to weaken against the dollar, people could go back to the yen. All right, so that means that people would want to buy back their dollars. That could mean that there's more demand for dollars, which could cause the value of USD to go up. So that's something we want to take a look at. All right, so now if we have the U.S. dollar strength, okay, that could mean that we're going to have stock market and commodity declines. right, now we've talked about the correlations here and how commodities are inversely correlated to the U.S. dollar. All right, and the stock market's been the same way. So basically, we talked about the two trades. It's either dollar up, markets, stocks and commodities down, or vice versa, dollar down, stocks and commodities up. Well, we've seen recently since the March lows that stock market's been up and commodities have rebounded as well. So, if we're going to see U.S. dollar strength, we could see a pullback in the markets. Something along the order of maybe like 10%. I know that sounds like a big number to people, in light of what's happened over the course of the past 2 years, but the market really could probably use a little pause right here, and this wouldn't be too horrible of a thing. So, we'll have to see what happens with this going forward, but keep an eye on it. All right, and then what we had today was we had Dallas Fed President Fisher. He came out today and he tried to jawbone the dollar higher. And he's basically reassuring other nations that we're not going to let the dollar tank. So, there's a lot of things going on here at the same time, with this global recession and trying to get, the global recovery going. And basically, for the global recovery to take place, the United States has to participate. It has to lead us out. So everyone's kind of been on board with that sentiment, and nobody's really, made a big stink about, the devaluation of the dollar and the way that Bernanke's been handling things, with the exception of the Chinese, of course, and others who are now calling for an alternate world's reserve currency. But, this guy comes out and he says, hey, you know what, we're not going to let the dollar tank. If things start to improve, we're going to reverse immediately. So, that kind of scares people a little bit, and it gets traders to start thinking about maybe covering some of their dollar shorts. All right, because if the reversal does happen quickly, all right, they're going to need to move. So, that's one way they can do it. Is just by jawboning the dollar a little bit. All right, now, so we're already starting to see signs of the recovery, okay? Because New Zealand and Australia, they're already starting to emerge from their recessions. Okay, their respective finance ministers have been claiming over the last couple of days and the past week that they probably should have higher interest rates there, that they're going to need to, pull back their stimulus that they've been having, and they're actually showing signs of growth. So, this could be on the way. I mean, basically, as one country starts to recover, a little domino effect starts to happen, and people start recovering. So once the United States hits recovery, all right, that's going to be the telltale sign for everybody else that things are going to get better. So at that point, we're going to have to see what happens with the dollar, because the dollar's also been part of the safe haven trade. So, people rush to the dollar when things look bad. So would they actually sell the dollar if things look good? It's hard to say. Okay, but right now, what it looks like is going to happen is that, we may see some recovery, which could cause the Fed to take action, namely, remove the quantitative easing that much faster, or there was something like raise rates. So we'll have to see how that happens. All right, so don't wait. Get in the course, get educated. Come to www.mywealth.com. Check out our currency courses to learn how to trade the fastest growing market in the world today.
So, while other countries' finance ministers are also concerned with the big picture, they also have to look out for their own interests. This could force the Fed to act before they are truly ready, which could send the Japanese yen much lower. With all the uncertainty out there, the one thing we can be sure of is a rise in market volatility, and look for USD JPY pair to rise. Let's just hope that this doesn't take down all the other markets with it. Alright, so to learn more about how to trade currencies, be sure to check out our currency trading course. I'm Mike Conlon. Thanks for being with me, and I hope to see you in that course.